The following program is sponsored by Adams Financial Concepts. Welcome to About Money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth and has a proven track record of managing long-term investments, surpassing the markets in the long term. The information shared in the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
And it is Saturday, and we're going to be talking about money. A lot of things going on in the world today. We're going to be talking about a lot of that. Chuck Knox, the late Chuck Knox, was the second coach of the Seattle Seahawks. And as the Seahawks start the season, it seems kind of appropriate to talk about Chuck Knox, because the one thing that I remember about him is his saying, play the hand you have. You have X number of players, you have injuries to face, you have other teams to face. The only way you win, and he was the first coach to get the Seahawks into the playoffs, the thing he said is play the hand you have. And I believe that's the same for the stock market, and I believe that's really important as we go into this time. This is not a political commentary. It's not meant to sound like a political discussion. It is what it is. We need to play the hand that we've been given. It's not how to survive, but it's how to position and benefit over the long term. And to do that, you have to know the hand that we've been given. Understand the reality and look at the numbers, look at the history. It's not a simple exercise. You listen to CNBC or several of the other financial services, and their agenda is not, I repeat, their agenda is not to guide your investments. Their agenda is to sell advertising. Higher viewership means they can charge more for advertising. That's what they're there for. It's not to deeply analyze. It's to make things fairly simple, fairly quick, and fairly easy to get through. But the situation we're facing is not a simple situation. So where are we? We're in the beginning of a trade war, and it's important to understand all aspects of that. You know, the president feels that it's going to be easy to win. And when you listen to places like CNBC, there's a lot of the pundits that talk about it, the gurus that talk about how easy it's going to be. You know, we have a $45 billion deficit of trade every month with China. Annually, that's about $500 billion. You know, and if you look at what's happening, in 2017, Chinese imports were about $500 billion, and the exports from the U.S. were $120 billion, $129 billion. In 2018, imports went up from 505 to 535, while exports went down from 129 to 120. The situation got worse by 17%. And through the early part of 2019, it's gotten even worse. Through the end of June, the deficit's gotten 8% worse. It's the same analysis. If you look at Europe, you know, in 2017, our imports were $434 billion. They increased to $487 billion, up 12% in 2018. Exports were $283 billion. Exports increased 12%. So the deficit got worse by that 12%. And June started to see some change in that. The trade imbalance was getting worse, but the trade between both countries was decreasing. Both imports and exports were decreasing from the previous year. July's numbers were even worse yet. So it's hurting businesses in both the U.S., it's hurting businesses in China, it's hurting people in the European zone. That's the danger of a trade war, is it affects everybody. It becomes a lose-lose situation. But that's only part of the story, because the U.S. can raise tariffs on a lot more goods on China than they can raise on us. And that's why the talking heads say we're going to be able to win. There's a quote recently in the Wall Street Journal. Zhang Chun, China's new ambassador to the United States, said last Friday, last Friday, and I quote, "China's position is very clear, that if the U.S. wishes to talk, then we will talk. If they want to fight, then we will fight." So I'm back to this question, or back to this thing. We have to play the hand we're dealt. We have to know, if you look at Chuck Knox, he has to look at the history of what the other teams have done and what the situation is. We live in a time where we have global supply chains. I remember I was a little tangentially involved in aerospace with one of my other businesses. And I remember Boeing talking about their supply chain. You know where it all has to begin? When they get the order to manufacture a plane, when they begin to order and begin the production of that plane, you know where it begins? In that little piece that goes in the lock on the lavatory. Because if that plane is ordered for Brazil, it has to be in Portuguese. If it's for China, it has to be in Chinese. If it's in Japan, Japanese. If it's in Georgia, the country of Georgia, it has to be in Georgian. If it's in the Ukraine, it has to be in Ukrainian. If it's in France, it has to be in French. So it all begins with that little piece that goes in that says occupied or vacant. Has to be in that language. And usually that little piece is made in a different country than the rest of the latch. So that little piece has to then be shipped to where the latch is put together. And they have to take that little piece, they have to put it into a latch, and then that latch has to be shipped usually to another country where the lavatory door is. And then, once that latch is installed on the lavatory door, that door has to be shipped to another country where the lavatory is made. And then once the lavatory is made, then it's shipped on a 737 to Renton, where it can be installed on an aircraft. But it all begins with that little piece. And once something begins to interrupt that whole chain, that global supply chain, it interrupts the productivity all the way around. And Boeing does that because they do it to do offset work in those countries. When they're trying to sell planes to the country of Georgia, for example, they will talk to the country of Georgia. Georgia's going to spend $50 or $80 billion to buy a plane. They will set up an arrangement to make some parts. Maybe they make that little latch for the door in Georgia. That's offset work. It's called offset work. And they do that all over the world. And so does Airbus. So does Embraer. It's something that's part of the sales process. And that happens with a lot of manufacturing we do today. So here's what happens in a trade war with China. You have to think about how that supply chain can be interrupted. There's a large South Korean company called LOTTE, L-O-T-T-E. And South Korea, a few years ago, decided to allow America to build an anti-ballistic missile defense system. It's called the Terminal High Altitude Area Defense System, THAAD, THAAD. It was to detect any threats from North Korea. But China looked at that anti-ballistic missile system as being able to probe into China and detect a lot of what was going on in China. And they didn't like that. And so they responded. Now, LOTTE was a South Korean company that had spent $9.6 billion to build department stores, to build malls, to build grocery stores in China. And when China didn't like what was going on with the THAAD, the THAAD system, what they did is they enforced a boycott of the LOTTE stores. Then, when that was only partially effective, then they sent in the fire marshals to shut down the store for fire inspection. And when those things were fixed up, then they sent in the quality control people to fix that. And when that was done, they sent in another inspection team. So they kept those stores shut down for months. And finally, Lot withdrew all their stores, just wrote off $9.6 billion because China could enforce that all the way around. They could have kept those stores closed for years. That's what's happening. And that's the power that the Chinese government has. And they can do more than just assess tariffs on what we're doing. And they have companies like Apple and Walmart, General Motors, Ford, Chrysler. Almost all shoes are assembled in China. Clothes, toys, all those things. Boeing has sold 6,000 planes, $1 trillion worth of planes. They can close all that down. That's what China can do if they choose to do it. They can target specific companies. They can target specific industries. And that's what begins to happen in a trade war. It's not just about tit for tat, raise the tariffs, raise the tariffs. They can take it to a much greater degree than we can. We're coming to a commercial break. Don't go away, because there's more to this story, and you need to hear what is said, because you need to know how to play the hand that we're being dealt. And there is a way to play it. Believe me. This may be negative, but we're going to talk about the positives. We'll be right back after this commercial break. Don't go away.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
I've been talking about, first of all, you have to play the hand that you're dealt. We don't have any choice in this trade war. It's happening, and it's probably not going to get over with. No matter what people say, we've launched into a trade war that's going to take years to unwind, probably. And it could get a lot worse. But think about what happened. Our president announced new tariffs on about $300 billion of additional goods, and China responded with two actions. Number one, they decided to boycott all farm products from the U.S. Now think about that. Most of the people who are producing farm products are in the Midwest, and they depend upon that. But most are from red states, right? They're Trump supporters. So China knows that, of course. So they cut off soybeans and milk from California, hogs from North Carolina. You know, Zippy Duval is quoted in the New York Times as saying, and he's a Georgia farmer, he said, "It's a body blow to the farmers of the U.S." Actually, it was in the Wall Street Journal. One of the biggest exports for our agricultural products has been to China. In 2017, $17 billion was exported to China. Last year, when they started to implement the tariffs, it dropped to $9 billion, and today it's zero. Zero exports to China. Think about it. We live in Washington. We have an apple production that's 250 million tons of apples. 250 million tons. It's a red area. They're primarily Trump voters. And whether they are or not, that China is focused on that. About half of the production from Eastern Washington, half of the apples we produce, go to China. 1.33 million tons of apples went to China in 2017, a production worth $1.46 billion. Today, if they continue their boycott of farm products, we will ship zero apples to China. Zero. 1.6 billion. That is designed to damage the farmers in Eastern Washington and to damage the Trump supporters. It's a trade war. They understand it's a trade war. The second issue that they took was to depreciate their currency or to let their currency go down. When their currency falls, their products become cheaper for other countries, in the U.S. too. But it makes them more competitive price-wise with products that are produced in the U.S. And not only will their currency depreciate, but other countries will take the same actions because if China's currency is going down, they want their currency to go down. So this will have an effect, a halo effect, that's going to go beyond China. We're going to see other countries devalue their currency as well. Our reaction was to label China a currency manipulator. And most of that is very symbolic. It means that you have to go to the International Monetary Fund, and the International Monetary Fund has to take action. But there's no question that this is a response to tariffs. It's not a tariff issue. It's a trade war issue. And as the Chinese yuan, that's their currency, as it drops, other nations will do the same thing. And it will impact our exports. It increases also the value of our U.S. treasuries. Think about it. If China paid 600,000 yuan to buy $100,000 worth of U.S. treasuries a year ago, and the price drops to 7, when they sell that treasury that they bought for 100,000 U.S. dollars, they pay 600,000 yuan for. Today, if the currency drops to 700, they get 700 yuan back. They have now an incentive to dump U.S. treasuries for a profit. And so do a lot of other countries. You know, the Barron's did an article on China and the trade war. And one of the quotes out of that is this, quote, "The Chinese have sent a strong signal that they're ready to rumble," said Paul Bluestein, a senior fellow at the Center for International Governance and Innovation. He's the author of Schism, a book due out next month about the fraying relationship between the United States and China. Quote, "To depreciate the currency at such a fraught time sends a signal that they're prepared to endure a heck of a lot of pain. And it doesn't surprise me that the markets would finally come around and say, this could be really bad." And of course, that was a week ago Friday when that came out. Yes, the markets can finally say, this could be really bad. Not only that, the products that Trump is putting tariffs on will affect consumers. In the early rounds, it was on steel and aluminum and things that are primarily industrial products. Things that, yeah, the prices will be passed on, but you won't really see the price increases. But the latest are in clothes and toys and footwear, and nearly every type of shoe is made in China. There's some leather shoes that are made in Europe, but most shoes are made in China. It's going to affect umbrellas and electric blankets and toys, iPhones, iPads, MacBooks, and all those Apple products. And essentially, the Barron article went on to say that the dollar amount extracted by the tariffs will exceed the incremental benefits in 2019 from the tax reductions enacted last year. That was a note from a keen-eyed Washington strategy at Stratogas Research Partners. The additional $30 billion from the proposed 10% tariff on $300 billion due to take effect next month would bring the total take from duties to $138 billion this year, more than the $122 billion of additional benefits from the tax cuts. So price increases will offset the impact of the tax cut. All of that is just the beginning of the trade war. The idea is to play the hand we were dealt, to know what's going on. The other aspect that's going on is the U.S. has played this one all by ourselves. We had the opportunity. We had signed the Trans-Pacific Partnership. It was a partnership with Australia, Brunei, Canada, Chile, Japan, Malaysia, Mexico, New Zealand, Peru, Singapore, Vietnam, and the United States. Note, China wasn't part of it. That's 40% of world trade. It would have reduced tariffs all around. It would have put all of those countries in it with us. It excluded China specifically because they wanted to extract certain concessions from China to join the TPP. It would have lowered tariffs on thousands of products, and it would have put some pressure on China to join because it would have made Chinese products more expensive. But without a TPP, that means those countries are now not aligned with the U.S. They've signed their own pact, and they will include China. At the same time, the European countries have had the same problems with China as the U.S., but the United States responds by putting tariffs on the European countries. So they have incentive to increase their trade with China and replace the agricultural products, replace the equipment. So not only have we pushed away our Southeast Asian partners and our Asian partners, we pushed away our European partners as well. And to add insult to injury, and this is not a political comment, it's just stating what's going on. This last week, the administration froze all foreign aid to all countries. They froze all foreign aid, while China is delivering $2 trillion to build the Belt and Road Initiative, while they're furnishing huge amounts of money to do infrastructure and projects around the world in those countries. Our response this last week is to cut off all foreign aid. So the question is, it sounds really negative. And when you think about the Standard & Poor's 500 companies, 40% of their revenues come from overseas sales. We're going this alone. We're not just in a tariff war with China. We're in a trading war. And we've pushed away all of our allies. We're going alone. And all of this sounds really negative. We have a hand to play, and it's not simply putting money in a CD and waiting it out. We have ways to take advantage of the current situation. And that's what we're going to be talking about when we come back. But first, I have an interview with a person who's here. You want to hear what he has to say? Completely off the trade war thing. We need to take a break from trade war and the negativity. So we want to hear from him, and then we'll come back and talk about some positive things. So don't go away. We're coming to a commercial break here pretty soon. If you missed this program, you can find it on YouTube. If you've missed my program on China, you should listen to that too, because all of this is really important. And I will say, as I end the program today, I will say you can do it yourself, but it's going to take a lot of work and a lot of effort. But you can do it. You should listen to my program on China before. You should listen to my program on how the secular bull market will end, because it all ties together, and it's all what you need to do. You don't want to get caught. You don't want to get caught in the headlights. You don't want to get caught unaware of what's happening, because we're in a war. It's not a gun war. We're in a trade war. And all signs indicate that it's going to continue for some time. So let's use that to our advantage, not to the disadvantage. The old Chinese saying, there's an opportunity in every situation. I don't know. I'll be right back after this commercial break. Don't go away. When I come back, you want to hear my guest. That's coming next.
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So we're going to return to the China thing in a bit, but first I want to introduce my guest today, Bob Hinthorn of HH Architects. Welcome to the program, Bob.
Thanks, Mike. Good to be here.
So why don't we start with your background?
Background, I'm a Seattle born and bred boy, born in Seattle, raised in the North End. Went to Moses Lake, Eastern Washington, that you were just talking about. Worked in the fields there, roguing peas and picking apples and strawberries, driving combine, all of the things that you do if you're fortunate enough to be raised in Moses Lake, or Moses Hole as it was called and still is. But it's a beautiful place, beautiful country, and feel real blessed to be raised in Eastern Washington and then come back here to Seattle when I was in middle school. Went to public schools, went to Meany Junior High and then Garfield, go Bulldogs, and then went to University of Washington and University School of Architecture, 5-year program, bachelor's degree in architecture. At that time, it's a 5-year program. Now it's a 6-year program. Enjoyed it. Ended up working for architects and engineers for 4 or 5 years, and then was fortunate enough to have a father who was not only a great architect, but a good guy to work for. And I've been there ever since, the last 38 years, and
Wow.
Still counting.
So, HH Architects, 38 years. I've only been in the financial services business 33 years, so I'm a baby in the house.
Well, that's the time I've been there. But the firm was actually established in 1936 and has been a succession of other firms since that time.
So let's talk about what HH Architects focuses on. Let's.
As far as the type of work that we do, it's a wide range. The pat answer, or the easy answer, is we do anything and everything. But in reality, most of our work is K-12 school design, and yet a counterpoint to that work is work for processing and manufacturing facilities throughout the Pacific Northwest. Architecture design and engineering design in Alaska on facilities, and actually we've been doing work in Russia recently on processing facilities, primarily fishing processing facilities, due to the vast market that they have there in seafood. So, and then occasionally we'll have house designs we'll do for friends and acquaintances, and that's the kind of balance that we like to create in the kind of work that we do. We don't want to concentrate on just large projects. It's the fun projects too that we want to maintain in the office.
So you've been doing some work in Skagit County too, right?
Yes, yeah.
Tell us about
for years. Skagit County is kind of unique in terms of its production, vegetable production. We've been doing both. In Bellingham, we've for years done processing and cold storage facilities for Bellingham Cold Storage, one of the largest cold storage facilities on the West Coast. We also did some commercial work there for in the Squalicum-Phil area, large developments of multi-use office buildings, but then also most recently in the Skagit Valley, processing facilities for vegetable processing, and those facilities are primarily what they call a cooling facility. And what that facility does is it provides the ability to get the product, broccoli, cauliflower, out of the field and into a environment where it's cooled immediately. And it just, the name of the game in any kind of food or seafood, whatever kind of food element you're talking about, is to get the temperature down so that you can maintain the quality of the product.
Because you lose the flavor and the the sugars. And
Yep, exactly. That's right. And the technology that we see today, you mentioned the Apple industry over in Eastern Washington, and we've done all kinds of CA, they call them controlled atmosphere facilities. And what they do in those facilities is they take the Apple product into an environment that's rich in nitrogen, and that nitrogen then displaces the oxygen and maintains the quality of the apple. And the same thing is true of every product, every food product that we have. There's a specific way of maintaining that quality.
So I want to talk about schools too.
Sure.
Because if you look at Seattle, Seattle is growing up. A lot of multifamily. We're a very low density housing, but we seem to be growing up. And for schools, they have limited space.
They do, yeah.
And so what are they doing? Because with more people coming in, that's more students, that's more school and classrooms.
Well, I think Seattle's unique in the school district's outlook on how they identified both the decrease in student population years ago, and instead of selling off those facilities that they had that were going vacant, they leased them on long-term leases and maintained them. And fortunately, they had them in their inventory in a manner that they could then put them back into use. And unfortunately, in some instances, they were vacant for so long, the seismic requirements of those facilities were very much changed. And so before they could be occupied for student use, they had to be upgraded. Mm-hmm. And in some instances, they were added on to either for additional square footage on the footprint on the ground, or they were converted and had multi-story additions. And a lot of the changes that we're seeing, not only in Seattle, but throughout Western Washington, is the migration to multi-story facilities. Whether it's a 2-story or a 3-story facility, you're right, the limited property area that's available and the demand for increased student population is driving that multi-story configuration for building design. But we see that in districts throughout Western Washington.
So talking about the changes that are going on in the upgrades, what are you seeing in terms of cost?
Over the last 5 years, we've seen a continual increase, and it's varied anywhere from 5 to 8%, and those costs were driven by, I think, as much as anything, the increased labor costs that we had because of that overall drive that we had for increased construction in the region. But most recently, you mentioned the tariff war, and we started seeing significant product and material increases on all construction, school construction, industrial construction, just general construction across the board. And the last, I would say, year and a half, we've looked at a 20% increase in costs of construction, in school construction primarily.
And I would imagine that that's not just in schools, it's on all construction that's happening with the tariffs and the labor.
It is, and yet I think for one, the fact that school construction is more and more complicated, it's more and more technically involved than it ever has been. More infrastructure, more elements of design, energy costs. We've got a new energy code, seismic codes that are all driving these increases.
So, before we go, I need you to talk about your typical client, your typical customer. Who would be the person that would be contacting you to have Hawthorne Architects work on their? It's interesting. Fortunately, we've got a long history, and the fact that we have both educational and industrial
history and clients, long-term clients. We've had clients for 30, 40 years, in fact. And we've worked for the Seattle School District and various districts throughout Washington. I think last count we have worked for 32 different school districts. So it's those past clients, but then also the new clients that we're looking at. We have new clients in commercial work and mixed use. So I remember hearing one architect answering the question to what kind of work do you do? And his comment was, we do anything and everything.
So how would somebody get a hold of you?
Oh, they could just give us a call, go to our website, hhaseattle.com, or they could give us a call. We've got a real person answering our telephones, so they can just call our office, and we'd be glad to talk to them.
Okay. Thanks for being on the program. Very instructive.
It's a pleasure.
Very interesting to know.
And I really appreciate your program.
Thank you. So we're coming to a commercial break. Don't go away. I will be right back after this break, and we're going to be talking more about playing the hand you're dealt. Given what's going on in the trade war, what do you do?
More about money coming up with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
I started the program by talking about China, and I'm talking about a trade war we're in. And yes, it goes beyond China, but we are at war. I also said, Chuck Knox, the second Seahawk coach who took us to the playoffs for the first time, he had a saying that play the hand you're dealt. Know the competition, develop a game plan. You have a certain number of players, you have injuries to deal with, you have all sorts of things to deal with, inclement weather sometimes. Develop a game plan. Know what you're doing. I believe it's the same thing going on. Right now, we are in a trade war. You can do some things which look or sound logical, but they're destructive. One of the first things is cash is not going to work. When we went through the Great Recession, you sold out before everything went down, then bought back just as soon as it started up. You had a great deal. This time, it's not going to work. There's a feeling that if you put the money into cash, it's going to earn a little bit of interest, and you're going to have the money when it comes out the other side. But if you've listened to my programs on how this is going to end, if it ends like I believe it's going to end with a bout of high inflation, like we saw in the 60s and 70s, cash is going to lose 70% of its value. If you put the money in cash, you're automatically going to lose, or potentially going to lose, probably going to lose, and I give it an 85% chance, you're going to lose 70% of the value. When the stock market went down during the Great Recession, it went down 37%. So you're comparing the Great Recession, 37% down, to 70% down if you're in cash. And by the way, when you're there and when you're down, it's going to be difficult to recover. Cash is not the answer. Cash is very definitely not the answer. Asset allocation, we went through that process in the Great Recession. The idea behind asset allocation was you invest a part in stocks, a part in bonds, a part in real estate, a part in gold, a part in this and a part in that, and commodities. And when one thing goes down, another goes up, and so they kind of offset, and everything works together, so you get a nice, easy return. Not the best return, but a nice, easy return. Asset allocation is not going to work either. We saw that during the Great Recession. Everything went down. Everything. And if we're dealing with inflation, it's going to affect all assets. They're all going to be down. So what do? We're entering into a time when it's a stock picker's market. It's a bottoms-up approach. It's examining each and every stock and evaluating it in terms of how it's going to perform in a world situation. 93% of the world's population of the world's middle class by 2030 will live outside the United States. They will live in emerging countries. You have to be very aware of that, because today, 40% of the revenues from Standard & Poor's companies comes from overseas. It's an impact, and the trade war will affect all of them. So you have to evaluate it. You have to evaluate the technology. You have to figure out which technologies are going to be crucial and which are not going to be. You have to look at companies. Richard Foster was the first one that did this study and showed that companies that were in the Standard & Poor's 500, Standard & Poor's in 1920 had an average life of 70 years. Today it's down to 15 years, and if we're in a trade war, it could be down to 10 years or 9 years. You have to evaluate what companies are going to survive and which ones aren't. You have to look at companies. I mean, you don't have to think very long and think about companies which we've seen die. An Eastman Kodak, just simply because even though they developed the digital camera, they neglected it. You see those kind of things happening. They dominated their market at one time. They dominated 90% of the film market, 89% of the film market, and 80% of the camera market. And yet today, they're a dead company. You have to look and evaluate what the technologies are and what companies are doing and how they're responding to the changes in demographics and lifetimes. You have to think about what we're seeing today. The two largest taxi companies don't own a single taxi. The largest hotel company in the world owns not a single hotel room. The largest media company owns no content. Those are sharing, and those are things that are changing what's shaping our world today. And I use those, even though I think there's changes still coming on. You know, it's back to Chuck Knox. You have to play the hand we're dealt. We can gripe about trade wars. We can say they're wrong. We can gripe about the politics. This is not a political commentary. This is not talking about politics. This is not talking or saying anything negative about the administration or anything that's going on there. It's saying we are in a trade war. You just accept that and move on. What is it? The Serenity Prayer that says something like, change those things you can change, accept those things you can't change, and God give me the wisdom to know the difference. It's playing the hand we're dealt. It's a bottoms-up approach to what's going on. You know, I've been preparing for this since November of 2016, because there was a high probability we were going to see a trade war. Maybe there was a probability. I won't say it was a high probability, but since November of 2016, we knew this was going to go on. I gave a talk about China in the Las Vegas Money Show. I give that same talk in the Seattle Money Show. I've written e-letters on China. It's all part of preparation for this whole thing. There's a lot of work to do. You know, Chuck Knox did not just sit back and on Sunday say, we're going to run the ball, we're going to pass the ball. Oh no, there was practice that went on day after day after day. There's an intense analysis by the coaches of the players' abilities, of the other team's ability, and an ability to look at what kind of game plan has to be developed. If you're going to do well in this trade war environment, you have to make those kinds of analysis and that kind of detail, and you have to work through it. You know, that's the way it's going to be. Or you can hire me and I'll do it for you. But that's the other aspect. You can do it yourself. And if you're not going to hire somebody like me, you should do it yourself. And you should be asking, if you have a financial advisor, you should be asking your financial advisor, how are we prepared for an all-out trade war? I give you examples of what's going on. The first two things they did is they banned all or boycotted all agricultural products. And secondly, they manipulated their currency. That's just the first two shots taken. They've got a whole arsenal of shots. You need to ask your financial advisor, what are you doing to prepare, because by the time they come, it's going to be over. If you don't have a game plan, if your plan isn't in place, don't be surprised when things go bad. That's the way things need to be done. You need to be prepared in all situations. There'll be times when every portfolio goes down. That just happens. It's how you recover out of those times and how you survive and thrive in this whole thing. So that's my deal on China. There's a lot of negative in that whole thing, but I hope there's a glimmer of hope, because some people have a game plan. I have a game plan. I've implemented that for my clients, and I've implemented that over the last almost 3 years, and I believe it's going to work. It's the best we can do. I'll be back next Saturday with more, and maybe on a more positive note. But anyway, have a great week. And if it's Saturday, we're talking about money.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you'd like Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Saturday at noon for more About Money with Mike Adams here on AM 1590. The Answer. The preceding program was sponsored by Adams Financial Concepts.